Hey, this is Joe from RealSuccess, and today we're going to be talking about why is real estate a great investment.
For real estate, we'll provide you with the knowledge, resources, and hands-on mentorship that will allow you to acquire financial intelligence and maximize your success as a real estate investor.
Investing in real estate can have many more benefits than other areas such as stocks, bonds, or mutual funds. Real estate provides higher returns, appreciates in value, and has predictable cash flow. Comparing to investors who rely on the stock market to accumulate assets, real estate focuses on income-producing assets that will pay yearly in income and continue to appreciate in value over the years. We have provided the top 12 reasons why real estate is a superior investment. Number 12, leveraging real estate. The most important advantage of real estate investing is leverage. It is the use of borrowed capital to increase the capital return of an investment. In real estate transactions, leveraging occurs when a mortgage is used to reduce the amount of investors' capital required to purchase a property. Once you have built up an equity position in an investment property, you can leverage that investment for cash in one or two ways. Number one, secure a second loan against the increased equity. Or number two, refinance the original loan amount plus the increased equity. This frees up money or cash to buy another investment property. Number 11, cash flow is important. Cash flow is the net spendable income obtained from the investment after all the operating expenses and mortgage payments have been done. A good real estate investment should provide about 6% or greater cash flow. Number 10, build up equity. Most real estate is purchased with a small down payment with the balance of the money being provided through debt financing from the lender. Over time, the principal amount of the mortgage is paid down, slowly at first, and then more rapidly towards the end of the amortization period. This principal reduction builds equity. Number 9, high tangible asset value. This helps reduce the principal-agent conflict or the extent to which the interest of the investor is dependent on the integrity and competence of managers and debtors. Even real estate investment trusts, which are listed real estate securities, often have regulations that mandate a minimum percentage of profits are paid out of dividends. Number 8, attractive and stable income returns. A key feature of real estate investment is the significant proportion of total returns accruing from rental income over the long term. This helps reduce the volatility as investments that rely more on income return tend to be less volatile than those that rely from capital value return. Number 7, real estate appreciation. Real estate appreciation is a simple concept. It refers to how the value of an investment property increases with time. On one hand, a real estate investor can also consider forced real estate appreciation. This is when the value of an investment property increases once repairs or renovations are carried out. Appreciation levels for real estate have been about 7% per year, including the downturn in the economy that started in 2007. Number 6, real estate modifications. One of the most unique and attractive advantages of real estate is that it's improvable. Because real estate is a tangible asset made of wood, brick, concrete, or glass, you can actually improve the value of any properties with some elbow grease and sweat equity. Whether the repairs are structural or cosmetic, you can do it yourself or hire someone. But the principle applies the same, right? You can make your real estate worth more by improving it. Number 5, retiring with real estate. When real estate is purchased, the cash flow is lower and the principal reduction on the mortgage is less. Over time, the mortgage is paid down or paid off, and the cash flow increases. In some respects, it's a forced saving program yielding a greater amount as time goes by, which is a perfect investment for retirement as it increases in cash flow down the road. Number 4, depreciation deductions. Depreciation is a non-cash expense permitted by tax code that depreciates the value of your investment property over time. However, the value of your investment property is actually appreciated. Depreciation deduction allows a real estate investor to generate a larger positive cash flow while reporting a lower income for tax purposes. This creates a higher return that you may initially realize. Number 3, tax breaks with real estate. Tax codes allow various deductions for the normal expense incurred in owning real estate, such as property upkeep, maintenance, improvements, and even the interest paid of the mortgage. The deductions can offset income and reduce your overall taxes. Which that leads to number 2, which is the lower tax rate. If your investment property is sold after a year, the gain is subject to capital gain tax rates, which depending upon your individual tax bracket is generally 15 or 20%, which is usually less than one's personal tax bracket. And number one, the most important one, you can actually defer your gains. Our tax code under the 1031 exchange permits the gains of the sale of the investment property to be transferred from the property being sold to a new property being purchased, hence deferring the payment on any tax of the sale of the property. In conclusion, there are multiple reasons why you should or could invest in real estate. Because you could leverage real estate for its cash flow, you build up equity, high tangible asset value, attractive and stable income return. It appreciates, you can retire with real estate. It has depreciation deductions, tax breaks, lower rates, and you can defer your gains. Thank you so much for watching this video. We're all about personal growth and achieving financial growth and creating a strong framework to achieve success. And once again, thanks for watching this and have a great day.